you saw my last video, then you know that times are just bad. People have been losing their jobs, hours have been getting cut at work, businesses have been closing, and some of the greatest investors of our time have even said that they can see a bigger recession coming than what happened back in 2008. So because of all this uncertainty in the world right now, especially here in the US, have you guys been thinking about what you're doing with your money? What have I been doing? Well, let's go find out. Hey, what's up you guys? It's Steven here with my channel Paycheck to Paycheck. And if you've been watching my videos, then you know that just recently I got my financial life on track after spending over a year in the market and learning how just not to invest. That way I could come here to a magical place like YouTube and just share with all of you guys my story. Just recently, I got a small emergency fund in place while I was trying to pay off my debt. And I finally learned how this whole money making and investing thing actually works, because this wasn't taught to us in school. And had I've known all along that making money didn't have to be so hard and complicated and require so much work, then my life would have been way different. And that's why I want to share my story with you all. So I really do appreciate each and every one of you guys for spending a small part of your valuable time here on my channel watching me share my story. So then if you haven't already, go ahead and tap that like button. That way, hopefully I can inspire someone else out there to take charge of their life and of their money. And subscribe. That way more people can stop living paycheck to paycheck. In today's video, I will be sharing with all of you my portfolio in one of my 3 different brokerage accounts. That way you can see which ETFs, stocks, and bonds I'm holding as of right now. So like I said previously, there is a lot of uncertainty going on in the world right now. The stock market just took this big nosedive and then it quickly recovered, and we don't really know if it's going to go up or down or just stay the same. So by the end of this video, I want to leave you all with something valuable so that you can just get started investing. If there's anything out there that you would like for me to make a video on or cover in more detail, then just let me know in the comment section down below and I will definitely make a video for you. I respond to every single comment as of right now because my channel is still small. Hopefully I can continue to do that as the channel continues to grow. But anyway, here is what I've been doing with my money. And if you need a refresher on what any of these items are, I did make a video covering different financial topics, and I will go ahead and just tag that video right here. Now, before I jump into this portfolio, I do need to make one quick disclaimer, and that is I am not a financial advisor. I am not telling any of you guys what to do with your money, and I'm not telling you guys how to invest your money either. I am simply just sharing my story with all of you, so hopefully I can help educate or inspire some of you guys in this complicated world of finance. Because I want each and every one of you out there to be able to have the knowledge to take charge of your life and of your money and stop living paycheck to paycheck. And know that when you are investing, you are never guaranteed to make money. You might actually lose money. And now with that out of the way, in this portfolio, I decided to take the approach that was recommended by Warren Buffett for people that don't know how to pick the best companies out there. And for people that don't necessarily want to spend their time analyzing the different financials of all these different companies that they're trying to invest in, because you should never buy an investment without actually knowing that business. And so what Warren Buffett recommends is investing into one ETF that tracks the overall stock market. And he says that by doing so, you will most likely outperform 99% of the investors out there. And so that is basically exactly what I did, except I don't always keep it simple, stupid. I did have to make it a little bit more complicated than just investing into one thing. And that's because I don't like to have all of my eggs in just one basket. And I did so by using the app M1 Finance. And I really do love this app, and I'm not sponsored by it, but I love this app because it makes investing so simple, and I can literally choose how I want my portfolio to be allocated among various stocks or ETFs. And they don't charge a commission on trades. If you click the link that I left in the description below, I will get a $10 referral bonus or whatever M1 Finance calls it, but that money literally just stays and it gets reinvested back into my portfolio. I've been consistent over the last several months with this account, making small deposits that in total average out to be about 15% of my before tax income. Basically, what I did here was I just made one mega ETF. I really liked to use Vanguard for a lot of these ETFs because, well, I mean, Vanguard comes so highly recommended by Warren Buffett. Here it is, my 7 different holdings in this portfolio. 6 ETFs and 1 stock. So the stock tickers that make up my portfolio, I'm going to discuss here in just a second, but I wanted to let you know that I will be doing a section later on in the video where I talk about why I chose each fund. This way you're able to pause and then you can record each holding so you can do your own research if you want to invest into any of these. But holding each holding in this portfolio allocated the way it is, according to the historical returns that M1 Finance gives me, would be a whopping 77%. And these stock tickers are Vanguard's Information Technology Exchange Traded Fund, ticker VGT, which makes up approximately 25% of my portfolio. Next, we have Vanguard's Dividend Appreciation ETF, stock ticker VIG, which makes up 15% of my overall portfolio. Then, making up another 15% of my portfolio, we have Vanguard's Emerging Markets ETF, stock ticker VWO. Then we have a non-exchange traded fund. This one is a company, and this one trades under stock ticker DLR. This company is Digital Realty Trust. This company is a real estate investment trust, and it makes up another 15% of my portfolio. The next fund that I hold in my portfolio is stock ticker VTI. This is Vanguard's total stock market, and this fund makes up approximately 15% of my overall portfolio. The next company that I hold in my portfolio is Berkshire Hathaway, ticker BRKB. This company makes up 10% of my overall portfolio holdings, and then coming in last, we have stock ticker BND. This is the Vanguard Total Bond Fund, and it makes up 5% of my overall portfolio. So you may be wondering why I hold so many different ETFs, especially if Warren Buffett recommends just investing into one fund like VTI and just set it and forget it. And the answer to that is, well, I like to be overly complicated when I don't have to be, but I also like to keep it simple at the same time because I'm honestly not that smart. But I did want this portfolio to track certain markets more than others, and by holding all these different ETFs, I essentially created one fund that tracks the overall US economy, so it is going to be skewed heavier towards technology. If you'd like, feel free to pause on any of these graphics that I've uploaded directly from Vanguard about each fund so that you can get more information if you'd like. So why did I choose the funds that I did? Vanguard's Information Technology, ticker VGT, holds some 332 different companies all in the tech sector. Currently, this fund trades for about $285 a share. This fund holds companies in the tech sector such as Apple, Microsoft, AMD, Intel, Qualcomm, Cisco, and many, many more. This fund has returned an average rate of about 19.9% over the last 10 years, and VGT is a market cap weighted fund, which basically means that this fund favors companies that are larger, and because it favors these companies, it holds more of these companies than it does smaller cap. Currently, 2 of some of the best financially managed companies out there make up almost 35% of the total fund's holdings, and those companies are Microsoft and Apple. VGT also pays dividends quarterly for a total annual dividend of $3 per share. And this fund does have one of the higher expense ratios in this total portfolio of 0.1%. Next, I have ticker VIG, holds some 214 different companies that have been known to consistently increase their dividend over the last 10 years. Currently, this fund trades for about $121 per share, and it is market cap weighted. This fund has an average annual return of about 12% over the last 10 years as well. Even though VIG does have a lower dividend yield than the Vanguard's S&P 500 index fund, I still want to include it into this portfolio because I am a huge fan of dividends, and I am hoping that as these companies continue to increase their dividends, then the Vanguard fund will of course follow suit. But as you can see, this fund does pay a quarterly dividend of $2.40 per share and has an expense ratio of just 0.06%. The next holding I have is stock ticker VWO. This is Vanguard's Emerging Markets Fund and holds some 5,225 different companies in emerging markets such as China. This fund is currently trading for about $42 per share and is market cap weighted. It holds companies such as Alibaba, Tencent, and Naspers. Has averaged an annual return of about 3% over the last 10 years, which isn't much, but this is one of the more speculative plays in my portfolio, and I want to include it because I don't want to have my entire portfolio just dependent on the US market. VWO does also pay a quarterly dividend that totals $1.44 per share and has an expense ratio of 0.1%. The next holding in my portfolio is stock ticker DLR. This is Digital Realty Trust. And over the last 10 years, DLR has averaged an annual return of about 14%. And I really want to include this into my portfolio because I wanted to take a largely tech-centered approach to my investment portfolio. But I still want to include some exposure to real estate because we're living in the Matrix right now, and if you haven't been outside yet, this is what it looks like. Well, maybe not quite yet, but DLR does pay an annual dividend of $4.48 per share, which I think is just awesome. Even though these dividends are taxed at my normal income tax rate because they come from a REIT, so they are taxed differently than the other holdings in my portfolio. And I will be doing another video on that topic to explain that into further detail. At the same time, I will be doing an in-depth analysis of this holding so that you can see firsthand how I go about my process of picking the different stocks that I want to buy. So make sure you subscribe so you don't miss that. The next holding I honestly probably could have done without, and that is stock ticker VTI. And it, like I said earlier, it does track the entire US stock market. It holds some 3,943 different companies here in the US. And currently, VTI is trading for about $162 per share. And 60% of this fund comes from certain sectors such as healthcare, financials, industrials, and consumer service, as well as an additional 25% of this fund being in the tech sector. This fund does track the broad US stock market, and over the last 10 years has averaged an annual return of about 13%. VTI also pays a quarterly dividend which totals $2.89 per share annually. And what's better is VTI has a crazy low expense ratio of just 0.03%. The next stock that I'm going to be sharing with you all is one of my favorite companies, Warren Buffett's very own Berkshire Hathaway. Currently, this company is trading for about $188 for their Class B shares, which means that you too can be an owner in Berkshire Hathaway. So Berkshire Hathaway is a company that invests in and holds some great companies such as Amazon, Apple, American Express, Bank of America, and many more. Previously, Berkshire Hathaway, trading under their preferred shares, ticker BRKA, has traded for as high as $340,000 per share before the pandemic. This company, I'm not gonna lie to you, is another one of my speculative plays, but it does make up 10% of my overall portfolio, because I love the idea that had I invested just $1 into Berkshire Hathaway back in 1964, when I wasn't even alive yet, then by the year 1986, that $1 would have been worth $200, when each share was trading for about $2,500, which is about what you can expect to pay for a share of Amazon or Google. Kinda. But I love Warren Buffett's approach to investing, and I love how he manages his company's money as well as his own money. And I'm really curious to see how Berkshire Hathaway will continue to perform. You guys need to remember that past performance does not ever project future earnings of that company. Berkshire Hathaway does not pay a dividend, so it's the only holding in my portfolio that doesn't, but this is important for a company's retained earnings. I will be doing a video explaining why retained earnings are so important for driving up the share price of a growth stock, so subscribe so you don't miss that. Finally, the last holding that I have is stock ticker BND. This is the Vanguard's total bond fund, and it holds some 9,658 different bonds. Currently, BND is trading for about $88 per share, and 60% of this total fund is in government bonds. 12% have an A rating, and another 20% have a BAA rating, which I will be explaining these ratings in another video. But Vanguard's total bond fund has averaged an annualized return of about 3% over the last 10 years, and ticker BND makes up just 5% of my total portfolio. But it does pay me every single month, so I love it for that. These payments total $2.17 per year per share that I own, and like I said, this is awesome because it's paying me every single month. I really want to include bonds into my portfolio because they can provide that stability. BND also has a super low expense ratio of just 0.035%. So I know that this was a lot of information to take in, but I wanted to explain why I hold each holding in this portfolio. Overall, since I started this portfolio back in February of 2020, have been about 14%, and mostly this is based off of market appreciation and the volatility of the stock market in general, because I haven't been invested into the market for that long in this portfolio. But it has averaged about the same annualized return as the S&P 500. So far this year, this portfolio's holdings have paid me almost $14 just to hold them. And if I hold just one share of each holding in this portfolio, then I can expect to increase my annual income by a whopping $16.40, which probably doesn't sound like that much, but it is starting to increase my overall income without me having to work extra hours or get another job. And this is where the real power of money begins to shine, by compounding on itself. And I'm really wondering just how much of an income generating asset I'm going to be able to build in this portfolio over the long term, based on a simple approach by using compound interest and consistently over and over again investing a small amount into the market over the long term, just by reinvesting the dividends that are being paid to me in this portfolio as well. So let me know your guys' thoughts down in the comment section below, and I will be sharing this portfolio's growth with all of you guys as I continue to make deposits into this account. That way you're able to see a real life example example of building a decent income generating portfolio just by being consistent. Or so I hope. But it's going to be awesome, and hopefully it's going to inspire some of you guys to just get started making your money work for you instead of the other way around, because it's a lot harder that way if you guys haven't began to do so already. It truly is an amazing and empowering feeling to be in control of your finances for the first time. Needless to say, countless studies have been done over the stock market and its returns throughout history. And basically what the research shows is that over the course of time, since the inception of the US stock market, time in the market has always beat trying to time the market, because you can never time the market. It's impossible to do so. So if you see your portfolio drop in value, don't panic. This just means that your investments are on sale right now by all of the people that are panicking. So buy their shares because it's going to rebound. Just give it time. Thank you guys so much for tuning in and spending a little piece of your day here with me, learning more about money. I hope that in this video you've been able to pick up the basics on what you need to get started investing and making your money start working for you. And always remember that if you never stop learning, then you will never stop earning.